So very good afternoon, children. Today we are going to do problem number 11, which is the financial statements of the life insurance companies, which consist of the revenue account as well as the balance sheet, and wherein we are going to prepare these two statements in the prescribed form as per the IRDA, right? So let's have a look into the question first. Yeah, here is one. Now, the following trial balance was extracted from the books of Aviva Life Insurance Company Limited as on 31st of March 2016, right? So here, before we pick up the items from the given trial balance, first let us have a look into the adjustments. So we have an adjustment for the premiums, okay, that is followed by the commission. Then there is also for the bonus which has been utilized. So this will have an effect on the premiums as well as on the bonus reduction of the premium on under schedule number 4. Then there is also expenses which are outstanding and also prepaid is said. Then there are claims which have been covered under the reinsurance, and also there is outstanding claims. Okay. Then the depreciation on the buildings also needs to be provided, and there is also premiums which is covered under the reinsurance. So payable under the reinsurance means covered under the reinsurance. Okay. So let me just. I think I still need to share the screen. 1 minute. I hope both the things are visible on the screen. That is a format on the left and question on the right. So we have adjustments for premiums, commission, bonus, expenses, claims, depreciation on the buildings, followed by the premiums covered under the reinsurance. So now I'm going to the trial balance and I'm going to pick up the amount from the trial balance. So first here we have on the debit side the claims. So claims is to be covered under the benefits, to be shown under the benefits. So therefore I'm just writing it as claims, and here I'm going to just put it as by death under it, and the amount of the claims which is to be payable by death is 60,000, and here it is by maturity. So here by maturity the total claims is 41,000 and 250. Okay, so just keep it aside. Next, followed by we have commission to the agent. So commission will be taken under schedule number 2. So what I'm doing here is wherever the adjustments are being given, so those items I'm first showing them in the working notes, and if there are no adjustments, then directly we can put them in the relevant statements, that is either the revenue or either the balance sheet. So here we have the commission. Commission here is 6,000 rupees. Then we have expenses of the management. And the amount of the expenses of the management here is 15,000. Then we have income tax on the profits. So income tax on the profits is also to be shown under the operating expenses itself. And the amount here is 250 in the outer column. Now, followed by we have surrenders. So surrenders, because there is no adjustments relating to the surrenders, I'm taking it directly to the revenue account. So surrenders here we have 9,000, and followed by annuities. So annuities we have 18,000 directly in the revenue account. Then we have bonus in cash. So bonus in cash again in the revenue account 6,750. But later we have of the premium, as we have seen that there is an adjustment which is being given towards the bonus in reduction of the premium. So I'm just taking working notes first, that is directly under schedule number 4 after the claims, if you make an observation. And the amount towards this is 2,250. Okay, then we have the debentures. So Usually what we do whenever we come across the debentures, we have an impression that, debentures means a liability. Okay. Normally even I do also, sometimes make the same mistake. When we come across the debentures, we consider the debentures always as a liability, because we have been used, okay, doing the company accounts, company final accounts, and always we have been taking the debentures on the liability side, considering that as, a source of, raising the finances for the organization. But here, if you see and if you understand, the amount of the debentures has been given under, okay, debit side of the trial balance, because the one which is being given over is the trial balance, and this is the debit and this is the credit. So here the debentures are forming a part of, the debit side of the trial balance. So debit means either it could be an asset or either it could be an expense. So here the debentures cannot be considered as an expense, so definitely it is an asset. So what type of an asset here? When it comes to the different assets of this particular company, we have investments, we have loans, and we also have what the fixed assets. So here the debentures is to be taken as, the investments made by the company. That means this particular insurance company has purchased the debentures of the other companies. So therefore it becomes a part of, the investments. So here I'm just creating one more schedule, that is 8 for investments, and under the investments I'm showing it as debentures. Maybe we may come across, more items relating to the investments, so I'm just putting this here, 2,58,750. Okay, then followed by the preliminary expenses. So for the time being, I just want you all to keep this preliminary expenses aside. But usually what happens is, if you are coming across any of, the fictitious assets, we can very well, take the fictitious assets over here. But if you want, I'll just put it for the time being, but later I'm going to adjust this. Okay. So I'm just taking this under schedule number 15, and the amount of the preliminary expenses over here is 750. Okay. Then later coming to the government securities. So government securities means government bonds. So this is also forming a part of, the investments. So therefore government securities, that is 3,07,500. The next we have loan on government securities. So as I told you, whenever you come across loan, I mean the term loan or mortgages, okay, maybe in India or, outside India, both becomes, part of the loans, and that is schedule number 9. So here again open a new worksheet for schedule number 9, that is loans. So under that you can show loans on government securities. So here it is 2,60,500. So you can make an assumption that the government itself has, borrowed the money from this life insurance by mortgaging their securities as a collateral. Okay. Then we have loans on company policies. It's been raised by mortgaging the policies of, so company amount here is 1,87,500. Then we have buildings. So buildings, schedule number 10, that is fixed assets, and under that you can put it as buildings. And the amount of the buildings here is 6,75,000, and wherein you can see there is an inclusion towards the buildings has been made, that is, additions towards the buildings has been made during the year to the extent of 37,500. So if you want, you can just put it as a disclosure. Okay, additions made during the year, additions forms as a notes to the accounts. Nothing to do. It's only for the sake of an information, children. Next, after this, now I'm moving to the credit side of the trial balance. So on the credit side, we have the life assurance fund. So the life assurance fund will be taken as schedule number, 5. Okay. So here I'm just taking it as schedule. I'm so sorry, it's not 5, it is 6, because it comes under reserves and surplus, because 5 stands for it is share capital. Okay, so reserves and surplus. So here we have the life assurance fund in short, and the amount of the fund here is 11 lakhs 25. Then we have, premiums which have been received. So premiums to be taken into schedule number 1. We have received, that is 1. Then we have consideration for annuities granted. So this can be shown directly in the revenue account itself. Next we have interest and the dividends, and as we can see that there are no adjustments relating to interest accrued, so therefore this amount of interest can be taken into the revenue account itself under income from investments, that is 37,500. Then we have annuities, outstanding annuities. But for example, if these outstanding annuities has been given as an adjustment, then what we usually do, we are supposed to add it to the given amount of the annuities, and also then take it as a liability, because annuities is always an expense, and any amount of the expenses which are still to be payable becomes what, liability. But here the given amount of annuities are in the trial balance, that is outstanding annuities are in the trial balance. So if they give any outstanding balances in the trial balance, okay, it will have only one effect, and that effect will be only in the balance sheet. So let it be towards outstanding incomes, or let it be towards outstanding expenses. So therefore this outstanding liabilities, I'm going to show it under the current liabilities, that is under schedule number 13. Current liabilities, schedule number 13. So here just copying this. So let's move after 10. um, we need to even have number 13, current liabilities. So under this we can very well show it as outstanding. The amount of the outstanding annuities is 15,000. Right? Then we have the capital. So here the capital of the company is 3,750 shares, which is at the rate of 100 each. So therefore the capital is 3,75,000, which can be directly to the balance sheet itself, because there is no calls in arrears. In case if you if you come across any amount of the calls in arrears, then again show this in the working notes minus the calls in arrears, then bring the amount of the paid up capital into the balance sheet. Okay, now coming to the buildings which is been the depreciation on the buildings, usually we call it as. So here there are two alternatives where the depreciation can be shown, okay, in the financial statements. One is it can be directly deducted from the concerned asset, or it can be shown as a provision on the liability side. So what the company was doing so far is, instead of deducting the depreciation on the buildings from this value, that is 6,75,000, they have been maintaining it in the name of a provision on the depreciation for buildings separately. Okay, but when you are doing it here, it is up to you whether you still want to continue that as a provision, or you would like to minus it from the asset. But what I am doing here is, I am going to minus it, because this is a previous year's depreciation, children. It is not the current year's, it is a previous year's depreciation. So therefore just directly minus it as depreciation, or buildings depreciation account. Let me put it in the same, so that there will not be any confusion when you are going to problem. Okay, so here the depreciation is 75,000. So once you minus this, the balance of the buildings here is 6 lakhs to be taken to the balance sheet. Right? I hope it is clear up to this. Now I'm moving to the adjustments. So the first adjustment here is, the premiums which is outstanding. So premium is always an income to the company. So therefore, if there is any outstanding premium, first we are supposed to add it to the concerned income. So add to the premiums here, that is add outstanding premium, and the amount of the premium which is outstanding is 22,500. So therefore the total is going to be changed. We'll do the totals later. Then the second effect of this outstanding premiums here is going to be, because any income which has been outstanding will be taken into the balance sheet on the assets side. So if you just have a look into, okay, the balance sheet here, the balance sheet on the asset side, that is, the current assets, right? Under the current assets, we have the cash in the bank, followed by the advances and the other assets. So what I'm doing here is I'm just trying to pick up the advances and the other assets, and here let us take it after 10, because after 10 we have the schedule number 11. Therefore I'm just mentioning this as schedule 11. Now under this you can write down outstanding, premiums, because it's a income still to be collected, and the amount of the premium outstanding here is 22,000. Then next we have the commission is also outstanding, but commission here is what? An expense. So first go to the schedule number 2, okay, which is here. So add outstanding, and the amount of the outstanding commission over here is 1,500. Now next, after adding it, because it is expense still to be payable, it becomes a part of, the current liabilities. So therefore here we have the current liabilities, and under that you can show it as outstanding, commission. Amount here is 1,500. Then next we have further bonus utilized in reduction of the premium. Whenever, if the bonus reduction of the premium is given in the trial balance, we directly show it under what? Expenses, that is schedule number 4. But if it is given as an adjustment, okay, and it is always, to be named as further bonus, that means apart from the bonus reduction of the premium, whatever is being given above, okay, in addition to that, okay, there is still further to be adjusted against the same. So therefore what is going to happen? This further bonus utilized in reduction of the premium is going to be a part of the expenses, as well as it is also a part of an income, that is a part of a premium. So to the premiums, whatever has to be receivable from the policy holder, and towards the bonus, whatever is to be payable to the same policy holder, instead of giving and taking, the adjustment is going to, I mean happening in the books itself. What we call it, it's a mutual adjustment which is to be made in the books. So therefore one side the income should be raised, and on the other side the expenses is also to be raised. So the what is that we are going to do now? We are going to take this to the premiums as well as to the bonus in reduction of the premium. So first let us make this as an adjustment to the premiums here. So if you just have a look into the premiums, okay, that is on schedule number 1. Already we have 1 lakh, I mean after adding the outstanding premiums, here we are going to have the total premiums as 1,80,000. So to this we are going to add, okay, further bonus in reduction of premium, and the amount of this is 1,500 rupees. So therefore add 1,500 here. So after adding 1,500, this will be 1,81,000. And the same thing we are carrying it forward to bonus in reduction of the premium here. After adding this, the total amount of the bonus in reduction of the premium is going to be 3,750. Okay, this is how the adjustment have to be made. So what we have done, we have added it to the premiums, We have added it to the premiums in the working notes, and we have also added it to the expenses, that is under schedule number 4. So both the sides it is going to have its impact. Now coming to the next adjustment, that is expenses of the management which is outstanding. So here let's go to schedule number 3, that is operating expenses, and here if it is outstanding, again write it as add outstanding expenses, and the amount of the expenses which are outstanding over here is 9,000. So once you add this 9,000, the total amount of the expenses for the year is 24,000. Okay, and again the same amount of the expenses which are outstanding will be taken as a current liability. So here outstanding expenses of management, that is 9,000 rupees, but immediately it's given as and prepaid. So in continuation to that we have prepaid. So if any amount of the expenses which are being prepaid, like you always learned insurance prepaid, insurance prepaid. So if the insurance is being prepaid, what we do, we minus it. So similarly here the expenses of this management, I mean as it has been prepaid, so first minus it from the expenses. So put it as less prepaid, and here the amount of the prepaid expenses is 2,250. Okay, so once you minus this, the balance here is going to be 21,750, right? Now, if the expenses are prepaid, we are supposed to take this onto the assets side of the balance sheet. So therefore, under schedule number 11, that is advances and other assets, show it as prepaid expenses of and that is 2,250. Okay, now going with the next adjustment, that is claims by death covered under reinsurance. Okay, for this I just would like to go with a small 1 minute, just bear with me for a second, so that you will never forget this. Okay, so in general what we do now, let us assume the first I mean table is the revenue account. So I'm just writing the claims onto the debit side and premiums onto the credit side. Okay, I'm doing this in the horizontal form, children, not in the vertical form. So this is the debit, and this is the credit, and the below table whatever I have maintained here is your balance sheet. So let us take this as liabilities, and this as what assets, right? This is also in the horizontal form. So whenever the claims, okay, which are reinsured, that is reinsurance is ceded, what we exactly call it as, if it is reinsurance ceded, what we do, we try to minus it from the claims, right? We minus it from the claims, and the second effect of this is going to be directly on the assets side of the balance sheet, and under the assets side we are going to write it as amount from other insurers. It's called as amount due from other insurers, or you can simply take it as due from other insurers. So the claims which have been reinsured, okay, will be always to be taken onto the assets side if it is given in the adjustment. If it is there only in the trial balance, then you can just simply minus it from the claims itself. And similarly, if there are any reinsured premiums, so what we do, we minus it from the premiums as reinsurance premiums. I'm talking about ceded, children, here. So the same thing is again to be taken to the liabilities side as amount, okay, due to other insurers. because when you're reinsuring your business, whatever you receive the premiums, you have to transfer to them directly, and whatever the claims here you are supposed to pay, because directly you are the first insurance company and it is being redirected to the others by you. So therefore the claims whatever you are supposed to pay is not your claims, that is to be received from the other company. Okay, so this is how the reinsurance towards the claims as well as towards the premiums have to be adjusted when it is being given in the adjustments. So first I'm going with the claims by death covered under reinsurance. Okay, so I'm just going to the claims that is under schedule number 4. So I'm just taking it as claims, and from here I'm deducting it as less reinsurance. Just take it as less reinsurance, and the amount of the death claims which have been reinsured is 15,000 rupees. So once you minus this 15,000, the balance of the claims over here is 45,000. And immediately what is that you are going to do, because it's not in the horizontal form which you are doing. Okay, so but you still have to remember it as if it is in the horizontal. So if you minus it from the claims, immediately you are going to take it on to the assets side. So on the assets side, it is to be shown under schedule number 11 as amount due from other insurers. Okay, so here put it as amount due from other insurers, and the amount here is 15,000. Now similar to this, I mean immediately after that we have another adjustment, that is further claims intimated towards death itself. So that is outstanding claims. So add outstanding claims, and the amount of the claims which is outstanding here is 11,250. So after adding this, the total here would be 56,250, and this can also be taken into the outer column, that is 41,000. The outstanding claims here will be again taken to the balance sheet, that is under schedule number 13. So under 13, let us, that is under current liabilities. So let's show it as outstanding claims, that is 11,250. Okay, then next we have the depreciation. So whatever the provision which is given in the trial balance is up to the last year, and again in the current year they still wanted to provide towards the depreciation on the buildings to the extent of 22,500. So first this part of the depreciation is to be taken to the operating expenses. Okay, so show it under the operating expenses as depreciation. On buildings, and the amount of the depreciation here is 22,500, and the same amount we are going to minus it from the concerned asset, that is already we deducted up to 75,000, plus the further depreciation also needs to be deducted. So minus the depreciation, that is 22,500. So once you minus 22,500, what will be the balance here? The balance will be 5 lakhs. It is 78,500, right? We'll check it out later. 1 minute. It is so. No. So it is 5,68,000 because it's here to be 9. But anyway, this botheration we can do it later. Next, let me first finish with the adjustments. Now next we have the last one, that is premiums payable under reinsurance. So if the premiums have been payable under reinsurance, as I already told you, minus it from the minus it from the premiums and take it as a liability. Okay, so first let us minus it from the given amount of the premiums here. So the premium amount here is 1,81,000. There's a balance of the premiums after the above adjustments. So less reinsurance and the amount of the reinsurance here is 6,000. Okay, so once you minus this 6,000, the balance of the premiums here is going to be so here it is going to be 1,75,500, right? Okay, so as we have come to an end, okay, the second effect of this is take it under current liabilities. So go to the current liabilities and show it under amount due to, that is 6. So first let us quickly make the totals of all excepting this is 5,77,500. This is 5. And we have what is the top of loans total, then we have investments total, then we have commission after adding because there's nothing else apart from the outstanding, then we have claims which is outstanding. So I'll just put them in a fill the boxes in a different color, only the totals, so that you can carry the totals to the statements, right? And this is also the balance, and the total of okay, including income tax and profits. Right. Okay, first let us go with the, as per the item wise. First is the premium. So the amount of the premiums over here is 1,75,500. Then we already got income from investments, consideration and other income. Now let's go with the commission. Commission is 7,500. Then operating expenses here it is 46,500. So 46,500. Then we have claims to be taken as 97,500. So the claims here is 97,500. Then we also have bonus reduction of the premium, that is 3,750. 3,750. Okay, so let's take the total of all the three. Now here let us calculate the balance. I'll just try to work out with the formula. Let's see if it works. Otherwise we may have to equal to this minus this minus this. So it's 91,500. Let's have a look. Tallied. So the surplus over here is 91,500. So immediately the surplus is taken to schedule number 6. Right, 6. Yeah, here we have. So 6 to this add surplus. Surplus here is 91,500. 1,500 and take the total. So I'm carrying this. Okay, I'll just wanted to show you something. So Control C, I'm taking this to the balance sheet now. 7, I think we have nothing to show on the 7, but followed by we also have, okay, schedule number 8 total is 9. 11 is what? Current assets, right? So the total of the current assets is a column. There's no cash in the bank balances, so just ignore. And we have current liabilities, right? Anything else? Okay. Um, Now, what I'm doing here is I'm taking the total. Fine, 15 lakhs 91,500, which may not match with the book answer. Why? I will also tell you the reasons next. Now I'm going to take the total of the assets. As you can see, the total of A and the total of B here. Now the total of A is more than the total of B. So in case if there is excess of the current liabilities over the current assets, definitely you will have a negative balance. So you need not worry about this at all, children. So whatever the negative balance which you get, okay, take the negative balance accordingly. This is it. Okay. So what I'm doing from this, okay, I need to have the total here. Okay, equal to this total minus this total, and we have a difference of 3,000 rupees, that is negative because the liabilities are more than the assets. So what you need to do here is just take it under the brackets. Okay, so this is an indication that this is a negative balance. So when you have a negative balance, what we exactly do, we try to, okay, already we got the minus figure here. So what is going to happen now? Take the total of this. I'm doing it separately here. Whether it works or not. Got it? 15 lakhs 91,500 exactly. Now, the total of your assets is exactly matching with your total of the liabilities, but the only reason why you're not getting the total as per the question, that is in a 15 lakhs 90,750, is only because of the preliminary expenses. So as I already been telling you all, if you are coming across any amount of the fictitious assets, so what I'm doing here is I will just take exactly the same balance sheet. I'm not doing anything. Okay, let me put it in a different sheet. Right. So what is the total here of reserves and surplus? 12 lakhs. So from this 12 lakhs 16,750, we are going to minus this 750 towards the preliminary expenses. So if you minus preliminary expenses here, no, this, okay, sorry, equal to this minus. So the total here will be, let's check. Okay, now what I'm doing here, I'm not taking this, removing it because it already adjusted against the dragging. See, this is how the difference. Okay, so there are two alternatives, children. The preliminary expenses can be taken into the miscellaneous expenditure under 15, but normally in practice, we don't show it on the assets side, but we adjust it to the extent of either any of the losses which has been given, or or any amount of the other fictitious assets like underwriting or discounts on issue of the shares or the debentures are being given. We directly minus it from the reserves and surplus. But if you don't deduct it from here, and if you are trying to show it against the assets also, You get the total of the balance sheet, okay, tally, that is same on either side, but you may not get the expected book answer. So now you have seen both the cases, how to get the book answer, and if you try to do it according to the normal practice, right, the miscellaneous expenditure to be shown exactly under the miscellaneous expenses only, if you follow that rule, then you will not get the book answer, but you will get a different answer. Clear? I hope now it is clear to everyone. So with this expectation, okay, I'm just ending the class here. Thank you, children.